Are you trying to trade Stacey Burke's trading system, but you are often overwhelmed by the workload of analysis that you have to do, by the price action in lifetime and the high discretion of the system? Then I might have something for you. I'm a Stacey Burke style trader myself, and I enhanced his system with some of his own elements, and I developed an indicator for my trading system over the last year that automates most of the things you have to do. This is not a real indicator, it's more a fully automated analysis system that does all the analysis you need for a session, then shows you on the chart in lifetime what's happening, the bias, all the signals, and also indicates you the context and the setups that you can take at that very moment. So in this video I will show you this in detail, how it works, and also give you a quick introduction into my system with it, and then how to use the indicator, what are the different use cases, and how to make profit with that trading every day. So if you're interested in that, stay tuned. So what is TrendPredator? TrendPredator is a suite of different indicators, 3 for now. One is supporting the other 2. That's the TrendPredator Fakeout. It's a free one that you can download on TradingView. This helps with some of the analysis and especially with entries. I will show you this later. And then there's 2 major versions, the Pro version and the Essential version. These are 2 different value propositions. I also will show you that. Both of these indicators are developed to enhance Stacey Burke's trading system and also my multi-timeframe trading system. So it fully automates your analysis needed for a session. So you don't have to do any analysis, only if you want to look at other things on top. But it basically already marks all the levels, identifies the bias, and identifies also setups for you. So it really automates all the analysis. It reduces discretionary workload because it's completely mechanical. So it prepares you for your session analysis-wise and also shows you the context and the signals, and then you just have to take the final decision for your entry. And it really shows you also especially what you should not take. So you will not countertrend things anymore once you use that, because it really shows you when everything is aligning and when you can trade with the trend. That's the whole idea of the thing. So overall, it really minimizes your session preparation. So I only need 10 minutes per day for preparing my sessions, and I come to the screen 5 minutes before I want to take a trade, and I just look at what happened over the last half hour or so, if anything changed, and then I just look at what the indicator shows me and I take my decisions. So what's the difference of the 2 versions? The Pro version goes even further. It has 180 or more than that by now different setup constellations coded into the indicator. I will show you that. There is questions coming up. Is that necessary? Well, is it necessary? There are so many constellations, and if you want to have the indicator helping you with these constellations, then it is necessary. It shows you for all of these constellations how strong is a setup for now. So you immediately know, do I want to scale into that, or is it a nail and bail? If it's a 1 star, is it a no star? Then you might not even take it. If it's a 3 star, you might really want to hold on and maybe even scale into that. So the Pro version really reads the market for you. Essential version does all the analysis for you and automates that, and then you can on top identify what you want to trade. So the Essential version is also nice if you are not fully trading my system and Stacey's system. So even if you're trading SMC or ICT or whatever, this can be a very nice confluence for multi-time frame analysis. So what's the Pro version in detail? So I will show you this immediately on the chart then, but just as an introduction. Here you see Everything on this chart is done by the indicator. So it starts off with the real basic multi-time frame analysis. It shows you the highs and the lows for different time frames. I mean, even this is already pretty tricky if you want to find indicators on the market or on TradingView that do that. It's not that easy that you see for 4-hour, 8-hour, day, week, and month, have a nice indicator that just shows you the high and the lows on the day, on the candle, not on the next one, but on the candle, that you really see market structure and the different candles. Then the second element, that's number one. The number two is extensions. So for the last candles, you can extend it. So if you know my trading style, I'm always looking at high, low, and close. So previous day high, previous day close, previous day low. Same for week, same for 8-hour. You can switch them on and off. It depends on how busy you want to have your chart. Then you see the breach levels. This is pretty important. So here, for example, an 8-hour breach level. So it broke out of the 8-hour and lost it again. So this is a red 8-hour fake out high. So it did a fake out high here, and this is your level to watch, because the 8-hour is bearish as soon as you are below this level. So, and this is done in real time. So it just shows you a red 8-hour fake out high here, a 4-hour fake out high red here. You know the lower time frames are bearish. You see that immediately. But there you see the weekly and the daily are green. They're bullish because the day is in breakout and the week is also in breakout. So you're kind of in a conflicting situation here. Or as you see, it's an uptrend. That's number 3, the breach levels. Then we come to the more interesting parts. That's number 4, is the multi-timeframe table. The multi-timeframe table is the table that consolidates all the signals. So there you see for the current time frame what we just discussed. So is the current time frame in fake out low, breakout, or fake out high? So it immediately indicates it here and also colors it. So you see here the 8-hour and the 4-hour are both in fake out high. So if you're trading on the lower time frame especially, then you look here from the middle to the right side, day, 8-hour, 4-hour. For example, for the 8-hour, then you can look on the bias, the current candle, and the previous candle. So the previous is in breakout and the 4-hour in fake out low. So you know this is reversing from the upside, but the last candle was still bullish. So you might reverse down, but it's not yet a full trend reversal. Also because you see the lower time frames are still bullish. The higher time frames, sorry. But on the day you see a 3 long. So you have the current time frame bias, you have the previous time frame bias, and then you have breakout. This counts the breakout according to Stacey's methodology. So 3L means 3 days of breakout. It just marks it for you here. 3 days of breakout longs on the day. On the 8-hour and the 4-hour would also have that. So I'm tracking the Stacey Burke signals across all time frames, not only on the day. So for 4-hour, 8-hour, day, week, and month, you have the 3 longs, 3 shorts. This is very good to see, because then you see if the different time frames are extended or if they are an unhealthy trend or everything. You should just see it with one view. And then we have first. This shows you once it's rolling over. So if you have a first red candle, so first red day, for example, would have a first red mark here. I will show you this later. This means 2 green days, 1 red day. Then you get a first red here. But also on the 8-hour, on the 4-hour, but also on the higher time frames. So with one view, you see all of that. Lower time frames for 3 session setups, 8-hour and 4-hour, the day for the classic Stacey Burke signals, and then week and month, especially for other time frame traders, and out of balance situations and the higher time frame trend. This is what also the ES version covers. Then the Pro version, you see, shows you on the top right side the context. So there you have, in this case, uptrend extended. A yellow one always means that this is coming to an end, or it's in a counter situation. But setup, reversal high of day. So the 8-hour did a fake out high on the day from the high of day. So this could be a reversal setup for you. type is counter because the higher time frames are all bullish. So it's a counter trend trade. Quality 1 star because of that. So you could take the risk to trade it down here if it reverses because it did a fake out high, but you need to be aware it's not the very best setup. It's not overextended on the lower time frames, only on the day, and the higher time frames are all bullish. That's why it's just 1 star. So that's the overall logic. And these setups here are refined by me all the time. So this is, at the moment, we have 180 variations in there. All the variations, I will show you the table later, across all these time frames. So it means 8-hour fake out high, day breakout in 3 longs, week breakout, month fake out low. This means a potential reversal high of day and an extended uptrend. That's how you read it. And the good thing is you just look at the chart and you immediately, what you otherwise would have would take a lot of focus from you to read that in the chart and to make the interpretation yourself. So with the indicator, it just shows it to you and you can focus completely on the structure. You know, do you have enough space to trade? What's the day? What's the time? And so on. You just focus on a potential reversal entry here. Is it a reversal or not? You may get a 5-minute fake out high continuation signal, whatever. So you don't have to take any energy to make interpretation of the chart anymore, especially not in lifetime. So that's the intro. Let's look at the chart for a moment to give you an impression how this looks like in reality. So here now how it looks like on the chart. You see here all the lines. Everything you see here on the chart is done by TrendPredator. It's a 1-hour time frame now, just to showcase you this a little bit. You see here the major important levels like previous day high, previous day low, previous day close. You see the high and lows are also on the candle. Here the orange ones are the 8-hour ones, for example. The gray ones are the 4-hour, blue ones are the daily. You see here the labels on the different levels. You see here the breach levels. Here's like a daily fake out high. So we are currently bullish on the daily, but bearish on the daily, but bullish on the 4-hour. So this is kind of coiling here at the moment. So if you look at the table here, you see also now, for example, 3 longs on the month. So the month is extended. Week is in breakout, but the current week is inside as it just traded. The day is also inside, coming out of a fake out high from the day before. We have 3 days of longs and a first red day. Potentially, as we know, in such a situation, a first red day fail, what we also will see in a minute. Then we have an inside 8-hour with a fake out low and fake out low on the 4-hour. So this is how you read that. And then TrendPredator already reads that for you. So it means reversal continuation. So put in a yellow, so a counter trend reversal continuation, as it was a fake out high, potentially. But it doesn't give you a setup. This is because the 8-hour and the daily are not aligning. You see, we have an 8-hour fake out low, which is bullish, and the day is a fake out high, which is bearish. So that's conflicting, and then it doesn't show you a setup. And if it doesn't show a setup, you don't do anything. So what I wanted to show you here is how it works in real time. So let's let it run a bit, and then you see here immediately how it draws the levels and the candles in real time once you just follow the chart. So it draws the breach levels once it breaks out and pulls back in, and it immediately follows with the context and the setups according to the chart. So here it's breaking out all the time. Now we have a reversal situation, for example, fake out high, potentially continuation, following back down. So this could be a bullish situation again, but it isn't. It's breaking down. So you really see how this draws all the levels and updates all these things in real time for you to trade. So now quickly going through the different functions and elements, bottom up. So looking at the first ones, this is the multi-time frame view. So this kind of only marks the high and low of the different time frames. So here purple is the high of the month, yellow are high and low of the week, blue is high and low of the day, orange high low of H8, gray high and low of the 4-hour candle. So this already gives you a very nice view on the market. And also you see this works in real time and just draws these levels as you go and marks them for you. So you see here now we are coming into the end of the week. So we don't have the current week's high and low. You can also add that, but as the week closes, you get the high and low here. You see immediately inside week, and you see how these days traded and so on. So this is just the high and the lows. This is the basis for everything for me. And this is very important, of course, to judge the chart. So next element are the extensions, previous high-low extensions. So here as an example, you take the previous day high and low. Here you get the previous day high, previous day low, close. Same with the week, same with the month. That's kind of the next level of functions. So first is the candles, second is the extensions, and then at the third we are looking at the breach levels. Let's do this for a moment. So now it's getting interesting. These are the breach levels. This is already a very strong functionality. It was the first one I have been developing because this already shows you the bias. So there you see the bias of the different time frames colored on your chart and also where the switch levels for this bias are. So it shows you the last level that was hit by price and how it trades to that. So here 4-hour trades in breakout, the 8-hour trades in breakout, the day trades in breakout, the week trades in breakout. So all these time frames are bullish and you're trading above. So very nice situation for a potential long continuation, and you would definitely not take any short here against all these time frames. And if we let that run, you will see here how this draws, then sometimes we get a red candle at the top as a reversal, so potential rollover of time frames, but then you always see you get another breakout again, so it's not really rolling over. So here you see how these multi-time frame situations work. Everything bullish again, hitting a next level, potentially red but not rolling over, and so on. So in every moment you have this in front of you and can judge the situation already based on only these levels, and you always know how far you are away from the last level that was hit. Now let's step back for a moment and reflect on the strategy. So many of you won't know the strategy, so I do a quick recap of it. If you want to dive deeply into that, look into my YouTube library. There's a lot of videos now on it, especially the 3 series, so trading Stacey Burke style part 1 to 3. There I go into real depth, and also the multi-time frame approach is explained there in detail. I just go over it now briefly that we can discuss how the indicator works, that we have a bit of a background. So what's the multi-time frame approach and how does this all fit together? So as Stacey Burke style traders, we all know the classic Stacey Burke signals: first green day, first red day, inside days, 3 days long, shorts, and looking at that for day, week, and potentially month, some of us. We all know this is a very strong signal set and a very strong system, but it has some flaws, as I discuss also in my videos, because it kind of makes you counter-trending moves, because you always look at first red day, extended markets, and you try to catch the reversals. And sometimes you do this in a counter-trend situation, and then it just is a first red day, first green day trap, and does another leg up, and you get stopped out again. I traded this for a long time. It is possible, of course, to trade that profitably, and I have been trading it profitably, but every now and then you might get destroyed if you're trying to counter trend a parabolic move, parabolic week, whatever. So what I developed is a multi-time frame logic that helps you to trade better with momentum and the trend. And it looks at the different time frames as we just have seen on the indicator and judges for every time frame what the bias is. So are you in breakout? Are you in fake out? Are you inside? And then if you look at that across time frames, you have a pretty nice picture and feeling on what is happening there, because you're really trying to find the moments, or especially for your reversals, where momentum is rolling over. And especially you want to have lower time frame momentum rolling over into a higher time frame trend. Then you have your real trades. You don't want to catch the high and counter trend a move, because you're potentially just trading a small pullback and then the next leg up takes you out again. So TrendPredator, and that's the idea, covers all of that. It covers the Stacey Burke signals even across all time frames. This is also very helpful, I find. And then all the multi-timeframe signals. So it helps you to put the Stacey Burke signals into a multi-timeframe context. And then I started trading this predominantly, and for me the Stacey Burke signals are rather confluence. You can also do it the other way around, that you trade Stacey Burke signals first and foremost and take this as confluence. This is as you want it to do, but the good thing about it is that the whole system is extremely mechanical, so there's not much discretion left. You just look at the signals and you can immediately look at that in a very structured and a mechanical way and judge the different setups. So this really prevents you from impulsive trading, going against the trend, re-entering and fighting the market. As we know, this is what potentially makes you lose a lot of money. If you trade mechanically, it's impossible to lose a lot of money. You might be flat if you do stupid stuff, but if you trade in a mechanical way, you will never lose a lot of money. So looking at the core logic, so the core logic, and this is also what Stacey proposes a lot, but he doesn't do this in a mechanical way. He always discusses about the three things that markets do. Every market just does three things, but how to track that? And with multi-time frame, we now have a logic to track that across all the time frames. So we really look at previous high and low here as potentially on the day, and if we break out, we are bullish. Above the breakout level, we are bullish, and we don't short as long as we are up here. Only if we potentially get 3 8-hour candles, 3 sessions of rise on the day, then with an 8-hour fake out high, we potentially short back down again. But as long as we are trading here in breakout, there is no shorts to be have. And then if we lose that potentially, this becomes a fake out high, and we are bearish below this breakout level. This is then a fake out high level, and as long as we're trading below that, we are bearish and looking for shorts, and we would never long that up again. As soon as we lose that level, we are not taking any longs against that, because that's a cross against the bias then again. If we are inside, it's neutral, or it takes the bias of the last candle. So if you have a fake out high here and then inside, then you're still bearish. So that's the overall logic, and this is what the system and the indicator tracks across time frames. So how do we use that to read the trend across time frames? It's pretty simple in the end, because you're really tracking, as the indicator does. You've seen that before. We're tracking the breakout levels. So we are potentially in a monthly breakout, so that's bullish. Maybe the week also breaks out, maybe the day breaks out, so you're in an uptrend, and you don't take any shorts here for the moment. Only if it gets extended with the 3 days of longs, or you get a fake out high. So if you have a daily fake out high here, that's beginning to be bearish, potentially with the 3 days of longs overextension. So you might look for longs, but the longs become especially good once you also lose the weekly breakout level and you get a weekly fake out high, and you see momentum really rolling over. Then it becomes heavy here and potentially loses the whole structure and takes the stops down here, or even crosses to the low of the week or previous week's low. So we are always tracking the breakouts. That's what Stacey says with other time frame traders driving. So if we watch what month and week does, we know what the other time frame traders are doing. Then price is always in a box, in a previous time frame box, and we check, is it breaking out? Is it breaking out reversing, or is it staying inside? Very important information. fake outs show the trap. So if you have a fake out and pulling back down, that's potentially day 1 3-day cycle, what Stacey also trades a lot. So there might be trap traders, and then you trade away from that. And then with the multi-time frame system, we look for setups that show alignment across all time frames. So you always are focusing on the best setups, and these are the ones potentially here in trend trades long, if everything is bullish, then rolling over. You're a bit careful at the beginning, but then if the time frame starts aligning bearishly again, then you might look for larger trades following the trend in the other direction. So what's the Stacey Burke master pattern? So this is what TrendPredator tries to follow completely. So I just did a huge video on that, the weekly template. Just for a moment to follow that again, we are always looking at a cycle along the week, typically along the days with Stacey's 3-day setups. So we potentially get fake out low here on the day 1 3-day cycle, first green day. Then we try to trade it up again. Here we have the trend trades, then it becomes overextended. Maybe you get a day 1 3-day cycle, first red day at the top again, then it rotates back down again. So we are always looking at this wave, you know. You have a day 1 3-day cycle, trap traders at the low, then you're trading longs until it's overextended, then you wait for the rollover, and then you take the next 3 legs down again. And this is very nicely explained by Steve Mauro with the market maker logic, or George Douglas Taylor with the 3-day cycle, or then especially Stacey Burke with the system. They all explain this wave function. And there is different signals and logics to follow that. Also, especially the opening range, for example, as described by Tony Crable or Schabacker. Then, if you look for the range expansions and so on. So we always looking for liquidity traps for the reversals at the extremes, then breakout expansions in the other direction, another trap at the high, and then again trading back from there to the lows. So this is the overall wave, more or less, the Stacey Burke master pattern, and this is exactly what we try to follow with TrendPredator. So the TrendPredator trading cycle, as I call it, is in the end the same thing, and the multi-time frame table and the setups are designed to follow that wave function. So you try to get a reversal down here at the low of the week, potentially here a bullish reversal, fake out low, continuation, low of day. This is kind of how the cycle starts. Then it becomes bullish. You're in a daily fake out low, the week we don't know for the moment, and then it starts rolling over. Week breaks out, so weekend day bullish. The month is also bullish. You see that here, so everything is bullish. You're in a bullish uptrend, and you're just following the trend. Breakout, continuation, low-hanging fruit. Breakout, continuation, low-hanging fruit. Breakout, continuation, low-hanging fruit. Now we have 3 days of breakouts. We're coming in an overextended uptrend. You see, then it becomes yellow. And then we watch if we get something else, and we get something else. Here you get a fake out high on the day, and then you have immediately a reversal, a potential one. It's not red yet because the lower time frames are bullish. But fake out high, continuation high of day. It's counter trend, but it's strongly overextended, and you also see the 8 hour is in a 3 long, and this is also adding to the quality here. So then you have a very nice reversal situation here. Overextended on the day, overextended on the sessions, 3 sessions of rise, first red on the 8 hour, daily fake out high, continuation. This is a very nice reversal setup, even that you don't have a first red day. You know, as I always say, first red day is a very weak signal. You're looking for reversal situations after a fake out high where all the time frames are rolling over. If it's also a first red day, nice, but it doesn't need to. The first red day trade here would be then the continuation trade on the next day, but also already this here would be a very nice trade. And here you see how all this is automated by TrendPredator, and you see how you follow that on the one hand with the multi-time frame table and also with the setups. So let's look at the table. So the multi-time frame table contains on the one axis the different time frames. On the other axis, as we already discussed, you have the current bias, the previous bias, the breakouts, and the first. So this is updated in real time, as we have seen, and the colors are showing you the bias. So here, this means the current month is in fake out high. So it broke previous month high and pulled back again, bearish. Here, fake out low. This means the day is inside. So it didn't hit the high and the low, but it's bullish because the previous day took the low and pulled up again. So fake out low, currently inside. Here you have the 8 hour is in a current fake out high, and the previous candle was an inside bar. So this is a very bearish signal. As we know, it's also valid on the 8 hour. So you have an 8 hour inside setup with a fake out high. That's pretty bearish, for example. So this is why this is yellow, because this is a real signal you want to follow. And then here again, 8 hour, a 4 hour fake out high, but the previous candle was in breakout. So the previous one is also very important. The current one is easy to follow. You see that because it just shows you what the current candle did concerning the previous candle. But the previous bias is a bit more complicated, because what we want to see here is if traders that took any of these trades are still in profit or still trapped. So if you see here, the previous candle is still in breakout. This means that the previous month traders, the long traders, are still in money. And we still tracking this in real time if this breakout level is lost or not. So this means that we currently still trading above the previous breakout level, and these traders are in the money. And only if this loses this breakout level again, then this switches also in real time to a fake out high. So as we have here. So here we see the previous week was in fake out high, and now the current one is in fake out low. So that means the previous week's long traders are still trapped, and we didn't relieve them yet. So as soon as the week after this fake out low might trade up again and crosses the breakout level of the week before that it was lost, then this switches to breakout, and then you see that the trend aligns and that both current and previous are potentially bullish again. So the previous is always good to track if you have a continuation or if it's still conflicting. So if you have a fake out high and here a breakout, then this is still conflicting. Then you don't have an ongoing trend. Then you have something in between. Only something like here, fake out low inside, maybe even after 3 short, then you know the day is pretty bullish, for example. Then breakout, this is done according to Stacey's logic. So 3 longs means we took 3 times, not in a row, but 3 times in a sequence, we took the high. There might be insides in between, but we never took the low. 3 lows, sorry, we took 3 times we took no, 3 longs, no, sorry, that's bearish. So we 3 times we broke out 3 days of longs, and we never touched a previous day's low, in this case a previous month low. And if it would touch the low, then this resets and vanishes again. If it's more than 3, then it still stays 3. That doesn't make sense to call this a 4 days of longs or 5 days and so on. Here the same to the short side. So this means it hit 3 times the previous day low. So shorts triggered 3 times, maybe insides in between, but it never triggered the high. So there's a lot of liquidity above, and that's why it's bullish. And as soon as it takes the high, this vanishes. And this you can see across all time frames. And then you can judge the overextension of the different time frames. And then we have first. First means first red day, first green day, but this is also tracked for all the time frames. So we have also a first green on the 4 hour, on the 8 hour, and so on. As I said, for me, this is not a very strong signal. And I only coded in a very basic logic for that. So this is just showing you if you have like a first red candle after 2 green candles, then it highlights this. This is not a perfect definition. The perfect definition is pretty tricky, but it's then up to you to see that. But I found this is already helpful. If you have a first red, that after 2 green candle, 1 first red candle, and this is taken as a confluence to the other signals, then it's for me still helpful. That doesn't mean that you short every first red here, of course, but it's a nice additional information. So this works real time. And as I said before, we always read that from the day. So the day is our major anchor point. Also with Stacey's signal days. Then we look to the left. If these time frames are aligning, then we have the context. So are we then in an aligning multi-time frame trend situation, or is this conflicting? And then we look to the right and look if the lower time frames are confirming a setup. Is the lower time frames, are they rolling over? Are they still trading in the other direction if you're looking for a setup? So here, potentially, if you would, for example, look for a long, fake out low, 3 days of shorts, current day inside, could be a very nice setup, especially with a weak fake out low. So it would be a fake out low continuation, long trade. But you see here, you have fake out highs on the 4 hour and the 8 hour. So you would never take a long as long as those are not turning bullish. This is how you read this table. So the 4 hour and the 8 hour, here you can see your 3 session setups. So if you have like a 3 long on the 8H and or H4, you have 3 sessions of long, 3 sessions of rise on the day. So this is for you then immediately visible in this table. So how do we read that along price traction action as it trades? So this is one of my favorite charts to showcase the multi-time frame alignment. So we here, as an example, we are coming out of a monthly fake out high, weekly breakdown, higher time frames bearish, also daily breakdown. Then you see here day, week, month, all bearish. But then we get a daily fake out low here. So you potentially take a long trade, fake out low, but the higher time frames are still bearish. So this is is a pullback reversal, low quality trades reversing against the higher time frame trend. And you see that here the week and month stay bearish, but the day is bullish. And then here you see we are this pullback comes to an end and consolidates sideways, and there we are still in breakout. So here you wouldn't short it even if you hit the previous week high again and confirm the fake out here. But then you get here into the swing point reversal. So this was the pullback reversal in intermediate uptrend. Then you get a swing point reversal, and as soon as the daily rolls over again, so here you get a daily fake out high then, and the next day inside. So here you see day fake out high, next day inside, and then it rolls over and loses it completely, and you see you get alignment again. Here you see the day was bullish in this period here, but the higher time frames were never bullish. Only here for a moment as the week turned into a fake out low. So as this would have pulled further up, then day and week would have been bullish. But it didn't. It lost it again, and then it rolled over, and here you had all time frames bearish again, and then you have your strong trades you're looking for with 3 stars that are just are marking the reversal into the downtrend. That's what Dr. David Paul always says. Look to trade the reversal back into the longer time frame trend. That's the sweet spot trading moment, because there you really get follow through and you trade it, especially then back down to this pullback reversal level. So then context and setup table. As we discussed, we have the context. The context reads day, week, and month. So I will show you examples of that. So this doesn't look at the lower time frames. And you see, once you're following the indicator, this stays relatively constant. And this is more or less what Stacey would call his signal days. So you have a reversal continuation, means you have a fake out low that continues back up bullishly into a higher time frame bullish situation. This doesn't change all hour. This is kind of is the daily bias, and you have an idea for the day what could happen there. But then the setup, this is the daily and the 8 hour. So this is really giving you almost a signal. It is not a signal, and you should not treat it as a signal. It's only showing you a potential setup in a specific price zone. So if this shows now previous fake out low, continuation low hanging fruit, that means we had a previous day's fake out low, current day trades inside. So I really like that. We want to trade a continuation in a low hanging fruit setup. That means that the 8 hour is not in a fake out. So you're not inside the 8 hour range, but you're breaking out of the 8 hour. That's why it's a low hanging fruit. It's a mixed bias. So there might be the month might be against you. That's why it's overall only 2 stars, but still a very nice setup. So this type always shows you, is it trend, is it mixed, or is it counter? Counter means day versus week and month. Mixed means day has week or month in the back and one against it. And trend means all are aligning. Quality, this is the most important thing. This is a pretty complex logic that I developed myself. And this is especially why these 180 constellations are important, because all these 180 constellations have a specific quality rating, and you always want to of course shoot for higher quality ratings. And I will show you this later. The indicator also has a filter function, so you can tell the indicator to only show you 3-star setups, or you only want to have reversal setups. So you can filter these 180 constellations to your liking. That's the strength of it. Now let's see how this looks in detail. So here you see all the developing context and setup states. So let's look into context first. So you see here it's nearly 20 different context states, and as discussed, context always is tied to the daily bias in relation to week and month. So let's go through them a bit. Like uptrend yellow would be like the uppermost extended one. That's uptrend extended. So everything bullish, but 3 days of longs. So potentially looking for a reversal. And you always, as you see here, the color yellow, green, and red. Red and green means everything aligning. All the bias time frames aligning in one direction. Yellow means you have a conflict. So here, for example, it's bullish, but it's extended. So be careful. It could go both ways. Uptrend green means it's a healthy uptrend. Everything bullish, no overextension. Reversal yellow means you have a fake out high on the day against week and month bullish bias. So a reversal day counter trend. Reversal continuation green means you had a fake out high on the day before, and you might look at a reversal continuation mixed trend here green, because the week is in your favor and the month against you. Then reversal continuation yellow would mean fake out high on the day before, current day inside, but counter trend, and so on. So reversal into uptrend green means you have a fake out low on the day and you join the bullish bias of week and month, and so on. Uptrend pullback yellow, it's a counter uptrend breakdown day. So you have a day that is in breakdown, but the higher time frames are bullish. So it's a pullback, but it's against the trend. So that's also conflicting. So you rather wait then for a fake out low. And if you get a fake out low on the day, you have a reversal continuation into uptrend again. Then conflicting is if it's really conflicting and doesn't even make sense in this cases. Consolidating yellow, for example, means inside week, next week trading inside. Inside as context means inside day, next day trading inside, and there you also get the bias of the inside day. So if the day is in fake out low from the day before or in fake out high, for example, then you have inside day, next day inside with a bias. That's also real time. So as you know, the only trade I take for with an inside day that's an inside the next day is a trade with the trend. So I never look at a reversal inside after an inside day. There you really want to wait for the higher low to be hit. And then here on the lower side, it's everything we just discussed mirrored in the other direction. So let's look at the chart, how this looks in detail. So here now gold scrolled a bit back, beginning of February. And you see here it's almost my weekly template screener. It's a bit different. I will show you the real one later on, but here we just look at the context for the moment. So here is a monthly separator. That's a weekly separator that I added with a different indicator. We have the previous month high here. We have the weekly high and low, and I have the weekly and monthly breach levels on. That's all I need for the moment. And then you see here my candles are gray, and now we can see how the context works for a moment. So at the moment it says uptrend extended, and you see here why. Because everything is bullish, but the day is in 3 longs. So you are in an extended uptrend, meaning be careful. It could be a reversal, but you don't know. And then from there we just click through a few of those and see how it reacts and what it shows. So if you go to the next day, we get another breakout day. So trend continued, still uptrend extended, still 3 longs. And now we also have the week in 3 longs, and the month is first green. So we are in a very bullish situation. You see here breakouts on the current, breakouts on the previous, but extended. So be careful with continuations, but potentially it goes on if you get a dump and pump template. So next day, let's look at that. That's a nice one. Here you have now reversal into uptrend because it broke down and did a fake out low on the day. You see that here. Now the 3 long is reset. So we are green again. So that's a reset day. It was a Thursday. Yeah. So it's a reset pulling back up. That's a very bullish overall context. Then let's look at the next one. Didn't really follow through. Now we have a fake out high on the day. That's why it says reversal. So the current day is in fake out high, but it's yellow because the week and the month are in breakout, but now we have a first red day. So that's a first red day, fake out high. That's why it says potentially a reversal. Then let's go further. But the next day just breaks out. So you see, as we know, this is never a guarantee. That's the context. It looked at a reversal, but we knew already it was counter trend. So in the end, it was a first red day fail. And just the strong uptrend just did a pullback, trapped some shorts here, and then did another leg up. And now we are in a healthy uptrend again. So everything bullish. The week is in 3 longs, but day is not in 3 long. So very bullish chart again. So let's go on a bit. Reversal. Now we have a fake out high again. On the day, it's Tuesday with 3 days of long. So again, potentially a reversal counter trend. Let's go on. What does it do? Reversal into uptrends. Now it did a fake out low. So the same situation as here again with the first red day. So again, potentially now a bit conflicting. Could be both, but we are in breakout. So it's still bullish. Let's see what's happening. Next one, breaking out. Breaking out. It's a healthy uptrend again. Everything bullish and so on. So this is pulling back. So you seen on the day it did a fake out high, collapsing down. Now we are in a reversal context. Fake out high on both days because it faked out also the day before. So that's also tracked. So for the moment we have a healthy, strong reversal situation because the week and the day are in fake out high. So we also lost the weekly breach level here, and this is why this also turns red. And let's go on a bit, reclaims it again. So weekly reclaimed. Now we have a potential reversal continuation, fake out high, next day trading inside, first red day, week in 3 longs, but the week is in breakout. That's why it's yellow. Be careful, it's a bit conflicting. And so on. So pulling further up, now we have an inside day, trend breakout. So it's an extended uptrend again because 3 days of longs and so on. So if you look at that, so you can do this as long as you want. So if you have the indicator, you can just play with it, and you see the context continuously follows and always shows you what the constellation is. But also, of course, as we know, we need the setup on the day. So this gives you the context, and you really only take trades once the setup, what we will look at now in a minute, aligns with this context. And the setup also already judges if the setup it identifies aligns with the context or if it's counter-trending anything. So that is the next step then. You have the context. This is kind of a background information for your session. And then you trade, as I always say, bottom up. And you need to really then, as next, have to check how is the day setting up and how is the session setting up. So setups. As I discussed, the description of the setups is always tied to the 8H and the day. So for example, reversal high of day means an 8-hour fake out high. In this case, reversal means against the daily. So that's the only one, the only setup where 8H and day is not aligned. All the others require an alignment of 8-hour and daily bias. So here, reversal high of the day, hopefully after 3 sessions of rise, for example. Reversal continuation means that you have a low-hanging fruit. So meaning it's an 8-hour breakdown. So you had a reversal on the high of the day and the 8-hour is now breaking down. That's why it's a low-hanging fruit. Breakout continuation, low-hanging fruit, for example, is a breakout day that continues now with the low-hanging fruit for the 8-hour. So 8 hours also in breakout. Then you get a breakout continuation, low-hanging fruit. Breakout continuation low of day means breakout on the day, continuing with a fake out low of the 8-hour. So low of day is always fake out low. Low-hanging fruit means continuation as a breakout in this case. Then you have fake out high continuation, high of day. That means a fake out high on the daily, on the day, high of day, also fake out high of the 8-hour. So that's then a fake out high continuation. Fake out high low continuation, low hanging fruit means 8-hour in breakdown. Then if we have a previous, that's the even stronger setups for the system. I will show you this in a minute. Previous breakdown means the previous day broke down and the current day is trading inside. And then high of day means an 8-hour fake out high. Then you have a previous breakdown, continuation, high of day. That's a very strong setup. Then the same with low hanging fruit, meaning the 8-hour breaks down. Previous day broke down, current day trades inside. 8-hour broke down and you take the continuation. Then here, previous fake out high continuation. That means the previous day did a fake out high and the current one trades inside and you have an 8-hour fake out high. Here, 8-hour break down and so on. Then we have inside. That means you have an inside 8-hour candle that trades inside still. Then you get an inside setup that gets the bias of the previous 8-hour candle. So it's the same like the inside day, but here we have the inside as context and here we have the inside as setup. So you typically want to wait until it hits one side. Sometimes we also might want to take the blow off. And then here, again, mirroring in the other direction, the same to fake out lows, breakouts, fake out low, continuation, and so on. So you get the logic, I guess. So let's look at it a bit deeper, what this means. So here you see, I mean, I won't share that in detail, of course. That's the 180 constellations. So you there have the previous day, the current day, monthly bias, weekly bias, first is the first red, first green, 3 longs, and so on, and the 8 hour. And for all of these constellations, I determined the context, the developing setup, and then also the quality and the type of this thing. So the TrendPredator Pro reads the chart for you. So it really looks at the multi-timeframe table, looks at the constellation of the signals, then checks in the table. So it goes through this table. It's not a real algorithm. It's more just like reading through it and identifying the right constellation. And then it prints this constellation, the context, and the setup. Sometimes you have a context, but the setup is not aligning, then it's blank. And if it's aligning, then it prints you both of those. And then you might plan your trade according to that. But now let's look again one level deeper how this really works. I brought you 2 examples here. So for example, we might have an uptrend that's healthy, and we've now seen what that means. So all time frames bullish. You already see that here. The core signals, day, breakout, week, breakout, or fake out low. That doesn't matter. Month, breakout, fake out low. So all bullish. That means uptrend. This setup, breakout, continuation, low of day, as we just discussed, means day in breakout. That's why it's a breakout continuation, because the 8 hour does a fake out low. So now you have all time frames aligning bullishly, and the 8 hour even makes a fake out low. So you have a nice risk reward and trading from the low of the day. That's then a breakout continuation, low of the day. Trend trade, because all aligning, 3 stars. That's more or less all you can have. So that's the perfect constellation. But additionally, the algorithm checks a couple of things. It checks if the day is in 3 longs or 3 shorts, if this is kind of joining your thesis, or if it's going against your thesis, then you get a stars added or subtracted. Then previous day, is it an inside day? So if you're trading, for example, this setup here with a daily breakout and you're coming out of an inside day, then you get a higher quality rating. Sometimes you also might get against an inside day. For example, if you trade a reversal high of the day, or we have the example then here, then you get a quality subtracted. But it also looks at the 3 session setup. So the 8 hour, is it in 3 long or 3 shorts? So if we trade, for example, such a breakout continuation low of day, we don't want to be in a 8 hours 3 longs, for example. Then you get 1 star subtracted. But you might be in a 8 hours 3 short. So if you have a dump and pump setup with 3 8-hour candles trading lower, then you get a quality star on top of it. Next example, reversal high of the day. Let's look at that. It's yellow, downtrend pullback. That is because we have the week in breakdown, for example, fake out high. It's mixed because the month is in breakout, but we get a breakout day. So the week is for the context, the core weekly breakdown. So we are in a downtrend, but the day breaks out. So it's a pullback to the weekly bias. Then we get an 8-hour fake out high of day on the day. So the day broke out, but we're now potentially trading a reversal on the high of the day. That's why it's a reversal high of day, mixed trend, 2 stars in this case. What is still also counting into that? So we are looking at, is the day in 3 longs, for example. Then, of course, a reversal high of the day is stronger. If we are somehow in 3 shorts, in this case, not possible because it's a daily breakout. If the previous day was an inside day, in this case, that was the example that I just referred to, then the quality gets 1 less because you don't want to trade short into an inside day breakout, of course, because out of an inside day you're looking for range expansions. So it punishes you for that. So it subtracts one of the quality stars. And again, 8 hours, 3 long, 3 short, same thing. If you have a 3 long 8H on the day, you get a quality star on top of it, because that's 3 sessions of rise. And of course, your reversal high of the day is even stronger. If you are in a 8-hour short, then you don't want to take a reversal high of the day. So this would then go in the other direction. So that's how the quality logic works. So now, examples. This is, I thought about that for quite long if I really want to share that, because that's the core of my system, but I guess that's valid to do it, and it's necessary, otherwise you won't get the system in depth. So here now 2 pages that show you the most important setups of my system, and also how TrendPredator identifies them. So that's the 3-star setups. So all the best setups are now on this page. It's a bit simplified, so there's of course a couple of setups behind that, but just for illustration, this works quite nice, I think. So for 3-star setups, you always want to have all time frames aligned. That's why it's green or red. And you typically look for continuations, of course. So you never trade a reversal. A 3-star setup, a reversal is never a 3-star setup for me. So that's what the big difference of my system and TrendPredator is in relation to Stacey Burke's system. I mean, Stacey Burke setups are in there, and you will see them in the 2-star setups. But for me, it's not 3-star, and it's not the first setups I'm hunting. I'm hunting for continuations. That's much better in my perspective. So what are the different variations? Let's start at the top. So let's say the current day breaks out, and the context is uptrend, full alignment, uptrend. What are you looking for? You're looking, of course, for a breakout continuation. So you're looking for a pullback and then an 8-hour fake out low continuation. That's the one we've just seen. That's one of the best setups you can have on the day. With the breakout on the day, if you look down here, maybe immediately, this is kind of the same logic, but this means the breakout was on the day before. And that's even stronger for me. So many people don't like to trade inside, but sometimes an inside trading day is very, very strong if you have the setup for it, and especially if the multi-time frame context is aligning. So meaning a breakout day on the day before, current day trading inside, and then you get an 8-hour fake out low continuation trading to the high of previous days. That's a breakout continuation. Uptrend full alignment, so uptrend continuation. It could also be a reversal into uptrend. This was a fake out low and not a breakout. So fake out low, current day trading inside, and then you take the fake out low of the 8-hour as a continuation. So that's the bullish continuation signals. You also can have a fake out low on the day. So if the day makes a fake out low, and then you get an 8-hour fake out low on top of that, then you are in the reversal into uptrend context if the higher time frames are aligning, and then you take the fake out continuation. The same applies in the other direction. So the breakdown on the day with bullish, bearish downtrend full alignment, then you look for an 8-hour fake out high continuation. Or previous day breakdown fake out high, then current day trading inside, 8-hour fake out high or breakdown as a low hanging fruit. Then you get the downtrend or reversal into downtrend, breakdown fake out high continuation. Same logic. Or you get the fake out high on the day that joins the uptrend. That's then the reversal into downtrend. Reversal means fake out high on the day joining the higher time frame downtrend. Then you have also a fake out high continuation trade. So this, in a nutshell, it's not very complex. It's just looking at alignment. What is the context of the day and the 8-hour? Is that aligning with the higher time frame? And if all of that aligns in one direction, this is the best trades you can have, and those get 3 stars on TrendPredator. Then 2 stars. For 2 stars, you see there's a lot of yellow stuff here. This is because it's not fully aligning, but that doesn't mean it's not a setup. So sometimes it's still a good setup. But as you also see, I mean, this we had before, but then you also get the reversal, which many people are trading and hunting for. So it means that you might get a 3 sessions of rise on the day, and then you get an 8-hour fake out high, and you trade the reversal even against the higher time frame bullish sentiment. So this means uptrend extended, hopefully. So if you have in a 3 days of longs, then it's better. I've shown you the quality ratings. Then you might want to take the reversal also if it's a mixed situation. And then, of course, also the other setups we just discussed, they also exist with not full alignment, but with some minor flaws, so that the monthly might be against you, or you're trading against the 3 longs or against an inside day. So there's a many constellation. That's why it's 180 ones in my logic table. But there's still sometimes nice setups. There are 2-star or also 1-star can be nice. So for example, a breakout continuation in an extended uptrend, or in a mixed uptrend, like breakdown on the monthly or a fake out high on the monthly, and so on. So you get the logic. You can go through that, and these are the setups where you have a yellow context that's not fully aligning, but potentially it's still a nice trade. So that's the setups. So now let's dive into the core of that all. So how do we use the indicator now for trading and for our entries? So the logic, I've shown you most of the stuff now. Let's now look how I built this up. There's a couple of use cases. We start with the trading, the real trading use case. So you always start with a context assessment. So evaluate the alignment of the higher time frames, as we just discussed. Month, week, weekday, more alignment, stronger setups. So you see here on the context, is this yellow or is it green? This is your very first view. If you have a green context, then you get interested, you know, and look for a setup that joins this context. If it's yellow, it might be still okay if some other things come together and if the quality is high. So first we start with the context and judge that. Maybe even zoom out and look on the daily chart as we just did. I will show you also my templates for the higher time frames in a minute. Then we look at the setup. Setups follow the bias of the daily and the 8-hour time frames. A setup always requires alignment. The only case where this is not true is a reversal on the day, if you get a fake out high on the 8-hour against the daily breakout, as we just discussed. Then the setup types are trend trades, as we just discussed, everything alignment, and you trade with the context, or a reversal trade with the lower time frames rolling over, and also looking at that you have as much higher time frames joining as soon as possible to get this rollover. And if you have that, then you often get nice follow through. Important for these reversal trades is always a healthy reversal, and the healthy rollover starts on the lower time frame. So if you have a breakout on the 8-hour, on the day, and so on, and you hit a monthly level, for example, you might watch it, but you won't take a short against all the lower time frames. So you really want to wait until the lower time frames are rolling over here, 4-hour, 8-hour, and so on. And if this then rolls over after you hit a monthly level, then you might get a nice short. But you would not, once you kind of would trade up here and this is all bullish and you hit a monthly level, I sometimes do it, but you need to be very aggressive then. But the safer option is to wait for it to show weakness, roll over, and then you take the continuation again. Then entry confirmation. I mean, there's a couple of things to look at. We won't cover that here. You can look into my YouTube library for that again. There is an extensive video on entries. That's the part 3 of the 3-part series. There I go very, very deep into that. and you also see TrendPredator. Just for a moment, what I typically look at is the alignment of 8 hour and 4 hour. So you don't want to counter trend any of that. So you really want to have here the 8 hour and the 4 hour lines, if you're shorting, for example, both in your back with the right bias. So if you have an 8 hour fake out high, but the 4 hour is still in breakout, then you need to be careful. So you really want to have the bias rolling over from the lower time frame, as we just discussed. And then you can discuss different entry options. As you see in my other video, you can, depending on timing in the session, take a breakout trade with the first bar. You can wait for a candle close. It might be a 5-minute close then back inside, or a 15-minute close, or you wait until it trades back up again and does a fake out high in your favor, trapping shorts or longs in this case, so the continuation trap, as I call it. Then you have the even safer entry. Sometimes you don't get that, so if you are waiting for that, you might miss some trades, but this could be the safer and better option for many traders. And then on top of that, I look at a couple of other things. We won't cover those in detail. I have my open box strategy with a specific indicator for the very low time frames. So this looks at the 1 hour and 30 minutes around equity open and the bias around that. You might want to look at VWAPs, for example, equity open VWAP or daily VWAPs. I typically just switch those on in the moment of my entry to just see where they are. Of course, the EMAs, 20 EMA is always good to see, and you want to have this in your back, or you look at the EMA cloud for the ain't coming back 5-star setups. Sometimes I also look for super trends. So if I hunting aggressively reversals, I want at least to have the super trend rolling over. Then I might be willing to also take an aggressive counter trend reversal trade. So that's the theory. So now let's look at the chart and see in detail how those setups look like and how you would trade them in lifetime. So here now, first trade example. This is a very nice reversal continuation situation. It is gold this year, 25th of February. And you see here with one view, again, everything here on the chart is done by TrendPredator without exception. I switch off typically if I look on the higher time frames. I will show you also my weekly template in a minute. I will switch off the lower time frame levels. So here the 4 and the 8 hour high lows, the extensions and the breach levels, because you don't need that, of course, to judge the overall situation. So I only have the daily high-low close, the weekly separators, and the monthly. And I have only also the breach levels for these 3 time frames. That's enough. And then you see you can save a template for that. Then as you like, you can play with those things as you prefer. And now you see context reversal continuation. This means day fake out high, current day inside. You see that here it faked out this one here and comes back in. Same with the week. Week fake out high because it took here the high of the week and traded back in, and it even lost this weekly level here. So this week was in breakout here still, but now pulling back down, and this makes then these both fake out high. And we are in a 3 weeks of longs. So you see here breakout, 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 and even a fourth one. 4 weeks of long breakouts, overextension. The day no overextension. The month is in breakout down here. So we are in a higher time frame uptrend that's now overextended here, and now potentially comes into a reversal rollover after this extension. So this is gap time. So this would make you potentially interested. It's a red context, and overall looks like a very nice setup. We are trading around the weekly closing price, and then we would go into the session and watch it more closely. So let's look at it one level deeper. So now 15-minute time frame gap time. So this is here now gap time coming into the New York session. And here you see again how I would typically look at that. Always 15-minute time frame once I'm screening the session. And here you now see daily previous day high and low, and closes up here. So we coming out of this fake out high as we just discussed. Reversal continuation, and here already says previous fake out high continuation, low hanging fruit, because the 8 hour is in breakdown. The higher time frames we discussed at the moment, 4 hour and 8 hour, are also bearish. But of course, timing, you don't take a short now here coming into the session, because as we know, if you dump into the New York session, think pump. So you never take a short at the beginning of the session from the low of the day. That doesn't make sense. So what are you doing? You just observe and look what is happening. And then it starts trading here, and you see immediately into the session, it pulls up. And here you see the only indicator I currently use also for this here. That's my open box indicator. It's Igor session initial balance. You find this on my Discord if you like. It just marks the first hour high and low, and also then the first 30 minutes of the session. This is for me very important to see the lower time frame bias and how the session itself sets up. So here you see session starts and immediately it pulls back. That's why you don't wanna take a trade there, or at least not a continuation trade. Sometimes, if you like, you can bet on a pivot here and trade the trap into first hour close. If you look at my session template video, I will explain you that, but you will also see here that that's not what you need to do, because the better trades are typically late in the session. So we get the pullback, and you see here now lower time frames bullish. So the setup disappears because the 8 hour is bullish for the moment, because you did an 8 hour. 8 hours in breakout, the 4 hours in breakout. Just here, because this is the last 8 hour candle, that's your 8 hour high and low that closes now end of first hour. This is a very important anchor point. So coming into the second hour, you now have the 8 hour high and low, you have the 4 hour high and low, and you have the first hour New York session high and low, and also the previous week closing price. So what are you doing from there? You observe. That's all you're doing. And then let's see how it goes on. This is now equity open, and this is what you very often see. So equity open just wicks to the top and pulls back down, engulfs. So this means you now have a 4 hour fake out high, 8 hour fake out high. So this turns bearish, and this is why this immediately jumps to a setup, previous fake out high, continuation high of day, because we have an 8 hour fake out high at that moment. Mixed, because month is in breakout, 2 stars from here. But I still wouldn't, I mean, you can, if you like, take that aggressively. I typically don't. You can take that off the bat. It's a very nice setup, but it's not necessary, and I will show you why. Because from there you typically get your entry nicely into third hour. As you know, I trade third hour. So here we now get an engulfment into first hour high. So losing that is important. We also lose the previous week's close, and then we come into end of the hour, and you see here the open box. What I'm also looking at, you can watch this video, that's the high and low of the 30 minutes after equity open. And then into third hour, you see it loses this immediately. And this would be my entry. Losing the open box, everything aligning, and except the monthly here. And then you plan your trade. And what I would do in this case, I would look at the 8 hour high and low and make a range expansion. So you could also trade that only to the low of the day, but that's a bit narrow. And then you make your short position here. Do it something like this. Maybe the stop behind the wick of this candle. Probably I would do, because if you enter somewhere here and it comes back up again, this wick here is your long trap. So coming into third hour, it just does a little wick to the top and then loses it immediately. That's longs that are trapped. And if these longs are relieved again, then you don't want to be in the trade anymore. So you place your stop probably behind this wick, and then it depends on your how aggressive you want to play that. You see this already to the low of the day would be 80 pips. But if you would trade that, what I do often, then you would need to be more aggressive with your stop, for example, and just place it inside the open box or something. Then you had an R3 trade. This is what I do very often, because low of the day trades, this is a very high probability trade. Once it hits the low of the day, you always have the risk that it reverses back up here. So this would be a very high probability trade, but of course it's a very nice setup, so you can also shoot for a larger one. So you could place your stop then behind the wick and then go for a one full expansion of the 8 hour, for example. This would be the next logic. And then you already have an R5 trade with 250 pip. So this is huge. Let's see how this would work out. And you see then if we click those through, it collapses immediately and does this move aggressively here into mid third hour already, and then I think it stalls a bit, and then even goes to the 2 full expansions here. You see the wick immediately goes there. So this is how you would do it, and you see it's everything shown by TrendPredator. So you have all the levels you need. You really want to see the time frames rolling over. Then you are careful at the low of the day, but if it collapses through like this, then you just stay inside the trade, of course. Then you could, with a one full expansion of the 8 hour, and you get it stalls here a bit. This could be a cutoff signal. I mean, I typically don't stay longer in that. And with an R5 trade, there's typically no need to stay in that trade. But as you see, you could also go then to a 2 full expansion. That's 400 pips. So 400 pips are 8 trades. So you can also hunt those. Of course, if you hunt that, your probability goes down, because it can always reverse here and take all your profit. So it's always a matter of your personal style. Are you hunting the R8 trade with a win rate of, I don't know, 30%? Or if you are hunting what I'm typically doing, maybe even only the R3 trade up here with a probability of maybe 80%. So that depends also on how your resilience is and how you run your system. So that's a nice reversal continuation trade. And let's look at some other examples. So now a breakout continuation trade. It's the 13th of March this year on gold again, 15-minute chart. This time we will not zoom out, we will zoom in for you to show you on the lower time frame how I would trade that. And you will also see you don't really need to zoom out. So you can really come also to the screen on the 15-minute and just look at the table, and you already see what's happening. So let's see what's up here. We're coming into gap time here, beginning of the New York session. We are in an extended uptrend. You see that here, month, week, day bullish, 3 days of longs. At the moment it tells you reversal high of the day because it's an 8 hour fake out high, so nothing to do. But we know very bullish here. It's extended, yes, but it's a very bullish chart with the higher time frames aligning. And then let's again see what it does coming into the session. And you see here equity open. I mean, this here is the close of the 8 hour. And if you zoom in, It's again, you get all the information you need. That's the 8-hour high and low, 4-hour high and low. You had a 4-hour fake out low into the session. This is the session start. And then you get the first hour high and low here. That's in here. And then equity open immediately breaks out. And that's then, of course, a bullish chart. And what if you want to trade that? It's not a high probability trade because it's against the 3 lows, 3 days of longs. So it's pretty aggressive. But on the other hand, you have an inside week breakout. The indicator doesn't calculate that, so you can do an discretionary override there, and I would probably still take that. Or I took it actually. So what we do next, we take the 8-hour high and low and make our range expansion to get some perspective. And then the question is, I mean, if you're an aggressive trader, you can take this off the bat. If you like this setup and it breaks out, you could take this aggressively. I sometimes do, but I typically wouldn't recommend that. So what do? We wait until we come into the 3rd hour. And you see here, that's also done by TrendPredator again. That's the open box, high and low of the 30 minutes after the open. And then we come into 3rd hour. That's here. If we want to take a long, we want to be above this higher purple line. So the open box needs to be broken out. But then if you want to take that trade, you need to be aggressive. And then here you see that creeps a bit on. We will look at that on the lower time frames also. And then it breaks out with the 30-minute time rotation. Very nice entry spot. Watch my session template video. I would always try to go in with the larger time rotations. This then breaks out. You can wait for the monthly even if you like, and take it from there. Let's look at the sizes of all of that. So here this would be 120 pip. So if we weighted into this 30-minute rotation, then I would probably take the wick of this 15-minute bar here with some buffer, and you would probably have some slippage, maybe the rollover of the candle. So if you go to the one full expansion, you would have a 100 pip R 3.5 trade. So that's would probably be my trade to do that. But also if you see such a candle here, if you're aggressive, then we are in the same discussion again. You could even go to this one here. It's 300 pips. That's insane. But you will see this can of course also be nice, but your probability, as discussed, goes down because potentially this reverses. But let's see how this looks like. The next candle goes up, stalls a bit, up, another one, and we finally, I think, cross through that, and you even get the second full expansion of that. So I typically would track the lower time frame fake outs, and this is the TrendPredator fake out that colors the candles here. This is also very interesting. Typically a slightly red candle means this is a fake out high, for example. So this one here, I would be careful. Then if I'm still in the trade, I would probably cut the trade here. And the same are the green ones. This green one here means fake out low. And the dark ones are switch candles. So I will show you this also on the weekly template. Switch candles means this is a potential trend rollover. So this here you've seen already that this might be turning the trend bullishly, and you never got a switch candle in the other direction anymore, only some fake out candles. So this would be a potential trade, and you see again TrendPredator would show you the way into that. And now let's look on the 5 minutes, how I would really trade that, because I typically take my entries on the 5 minute, because there you see it even better. So now the same on the 5 minute chart. I left the drawings on there, and we are now at equity open, and I will show you in detail how I would look at that. So I typically mark the equity open time. I mean, I normally don't mark it actually, because I see this then, but in this case for you to showcase that, it's nice to see. This is then equity open. I also mark the equity open level because you always want to see if these traders are in the money or not. So New York open like this, and then we would let that run, and you will immediately see how the open box prints. So I wouldn't take any trade here typically, because there the open box prints, and you typically want to wait for the open box to close. I will show you the open box, how I look at that typically. So this is the open box, exactly like this. So this is what you want to wait to be broken out. And then we also can mark the 1 hour time rotation here. That's third hour time rotation. And that's how I would look at that. So you see here, equity open pushes out, then you get the 15-minute time rotation that pulls back. That's why you don't typically, that's why you're very careful with this 15-minute rotation, because it often traps again. So the whole open box here is typically a trap, potentially in both directions. But then you get here, you see that a switch candle, a green one, bullish again, and then trading into third hour into the open box high. And this then looks interesting. I mean, you can take that aggressively, but I would typically wait a bit, especially in such an extended situation. But then you see here a green fake out low candle, a 5-minute fake out low candle. So this is what I'm waiting for, and then you can take this with the 15-minute rotation if you like. We'll see. I think it still went a bit sideways, but then from there it more or less traded on. So you see here, this 5-minute fake out low was a continuation signal, so you could take that with this 15-minute bar. That was already a nice entry. That was the one we were looking at on the higher time frame. And then you get another here with the 30-minute rotation. It does another fake out low continuation. This is the perfect entry spot then. And you see how TrendPredator fake out shows you these candles. So this is the 5-minute fake out low candle, your first one. Here, yes, you get a 5-minute fake out high, the red one. So you would be careful immediately scaling in with this next candle. But if you see then this wick to the bottom and it comes up again, reclaiming this fake out high candle, then you have your entry here. And then you would let that run up from here. As we discussed, you go to the range expansion. You can also look at range expansion of the open box, but this one was pretty narrow. So if you have a narrow open box, you look at range expansions anyway. And I would then in this case go to the 8-hour range expansions, and the rest we already discussed. And then you see here, yeah, here you get a 5-minute fake out high. So maybe I would have cut the trade here somewhere, but that's already 150 pip R4. And then again, as discussed, it depends on your risk appetite. You can hold that on to the close or something, but then it wicks around here and creeps further up. So you can take that trade or hold it here, but I would typically, after this 3 impulsive 5-minute bars into the target, I typically cut the trade here and call it a day and do other things, because that's such creeping stuff. I don't want to be in a trade for another, I don't know, half an hour. That's not my trading style. I hit my trade, I have 15 minutes, have the move, and that's it. And this is also what TrendPredator here helps you to do. So here maybe some more examples, just staying on the 15, that we don't take too much time. This is a trade I also took many others as well. It's a pretty conflicting situation, but you see then also how TrendPredator helps you to trade and identify that. So you see the week was in breakout coming up. This is Thursday, and we're coming into Friday, end of the week. We are in a daily fake out low here, and everything is bullish for the moment. We have a first red day. But now with the fake out low, I would be very careful to short that. So I typically don't short into a fresh fake out low. So I always wait then for this level to be lost. So you see here, it's even a 3-star setup for the moment, because it's fully bullishly aligning. You have the day in fake out low, the 8-hour in fake out low, breakout. So it could be a reversal into the uptrend from here with a fake out low, continuation low of day. But we are in gap time, so there is nothing to do for the moment. So we still just observe, but it already looks like an interesting situation. And especially you see how there is space. I mean, Stacey always says that, look for space, that we have a breakout here, and this cries for I have space here below me. So then you would just observe and wait how it trades into the session. Now the session starts. Still in breakout here, 4-hour breakout, 8-hour breakout, so still nothing to do. But then you see equity open immediately engulfs. And this is then where you get interested. So it engulfs. Maybe we go back 1 bar here to see that better again. Like this, 1 bar more. This is the engulfment. And there you immediately see you don't want to take that trade. I mean, it still shows you here the setup, because the setup is tied to the 8-hour, and the 8-hour is in fake out low, but you see already the 4-hour is in fake out high. And then if you have this red bias line here above you, then you even ignore what TrendPredator tells you, because this is then already a bearish signal. But still, I wouldn't do anything. I mean, this is oh no, it's not even equity open, it's a 15 minutes before. So the equity open immediately blew then there to the bottom, and you see then here it switches completely around. It then says uptrend pullback, because the day goes into breakdown. The higher time frames are still bullish, so weekly breakout, monthly breakout. So this is your line in the sand, that's the target. But then you get a breakdown with the first red day, and then also the lower time frame switch bearish, breakdown, and then you have immediately a breakdown continuation, low hanging fruit. It's counter trend because the higher time frames are bullish. But in this situation, once it blows through the bottom here, then I took the trade, I think here, breaking down of the 8-hour. I mean, of course, you need to be very awake and with the finger on the trigger already, but I just took the breakdown of the 8-hour target. Of course, in this case is your weekly breakdown level down here. Levels are all on the chart, as you see. You give this a bit of space here, maybe a 30 pip or a 25 pip stop or something. Then you see that's an R5. That's all you need. And then you wait what is happening there, give it 1 more bar, and I think that was what was also it. I think I took it here, and then the next bar already slammed into the target. That's 150 pip. Maybe you have a bit more slippage here, something like this. 150 pip, R4 trade. The stop is here because you don't want to have the 8-hour in a fake out low. So as soon as it reclaims this 8-hour level, you're out of the trade. So in this case, if you take it off the bat with the equity open, of course you're scalping that. And in this case, as it hits the weekly breakdown level, I'm out of the trade. And then you see from there, it did 1 more leg down even, but then did a fake out low. And here you're coming into 3rd hour. So 3rd hour here at the low after this move. You could even take a long. I think I wouldn't do it because you're in a daily breakdown, and TrendPredator will not show you. Here you see the upper time frames are bullish, but the lower time frames are all bearish because you just broke down. So you're really in a broken down market, and to trade this dead cat bounce against the lower time frames is something I would never do. But in this case, I think it was creeping up again. and then stalling somewhere here. So this is nothing you want to be in. The trade was this blow off to the bottom, and you see how you nicely can spot the structure with TrendPredator here, and it guides you into this trade, even if even though it wasn't a high quality here. But of course you can override that and also judge the pattern discretionary a bit, and then get into nice trades. So here maybe one example, as I like to do it, where you shouldn't do anything. So this is also then how you would see how TrendPredator shows you that. So here already you see you are in a daily fake out high. You have a 4-hour, 8-hour breakout that's bullish. Here, up here it's bearish, and down here you're bullish, and you're in between all those levels coming into the New York session here. Now we are in gap time, and then let's see how this trades. New York session opens, pulls down, so these are then bearish. Immediately came up again, pulls down again. So you see here the weekly closing price, daily closing price. You really don't want to short into those. I mean, it could be a range trade, but I wouldn't recommend to do that. And you see here the lower time frames are now bearish, but also with first greens. Higher time frames bullish with a 3 long on the month, so that's pretty confusing. And you're trading just inside between all those levels. It shows you even a 1-star setup here, but this would be kind of an inside range trade, so I wouldn't recommend that. You also see that's a yellow reversal continuation against the higher time frames bullish sentiment, and then you get even lower time frame. Let's see, fake out low here on the 4-hour. As you see with an inside bar on the 4-hour, you see that immediately. That's also not very nice, so you really don't want to short from here, even if this is shown by TrendPredator. But you see here all the levels, and then you get a wick to the bottom into the end of the session. It does an 8-hour fake out low, and then it immediately erases the setup also, because this is then also conflicting. And you see here you're still trading inside the open box. What I'm observing closely. And then there it still just trades sideways more or less. We have now the fake out low that we don't want to see. It still says reversal continuation, context yellow, but then everything else is blank because there is nothing to do. And as you see from there, it just runs sideways. Now you have 8-hour and 4-hour bullish from the bottom, bearish daily from the top. It's just a range with probably traders trapped on both sides, and it's going sideways, and there's just nothing to do for you. And if you watch closely with TrendPredator all these levels and bias, then you see it's just not clear. It's just a confusing situation, and there's just nothing to do for you. So one more example, maybe a nice one here with a very strong alignment and then also a reversal. This was also a trade many took in both directions. So here you see you have the higher time frames all bullish. It's gold, no surprise. Weekly and monthly breakout level down here, everything very strong, and the day is a fake out low continuation for the next day. So that's one of the favorite setups of my system. So you have a breakout here, even then the next day does a dump and pump with a fake out low closing here, and then your bias is of course bullish from there, because higher time frames bullish. Next day inside coming from a fake out low, that's a reversal continuation into uptrend green, and very nice overall. For the moment here we have an 8-hour fake out high. That's this little wick here coming into the session, so you would be careful. But then coming into the New York session, it immediately does a fake out to the low here, and then let's see, you get immediately the 3-star setup, previous fake out low, continuation, low of the day, because you have an 8-hour fake out low. As you know, I typically wouldn't do that, but in this case it was allowed, or many did that, to take this trade here after this huge short trap wick into the open. So you already could have traded that. You see here then this is into 3rd hour. Let's see how this trades up from here. No, that's 2nd hour, because this was before daylight saving. So this is 3rd hour. This was your that's 1st hour, 2nd hour, exactly. So the entry could have been into 2nd hour potentially, if you want to take that. So you had a very nice pivot here with the 30-minute rotation, and then 9 o'clock you see here that the fake out low off closing price. So this could have been a very nice trade from here. As you know, I typically don't do that, but then we immediately mark our levels here, the 8-hour range expansion, and after we have then the open box, because you see here the equity open breaks out from here. It's still bullish, but in a 2-star, because it's low hanging fruit. So you could also have taken that from there, and then you see from there it's coming further up. You would also want to see the open box range expansion. It's here. So you know, in such an impulsive situation, you want to be careful with this one full expansion trades. So you just watch. That doesn't mean you can't take them. As you see, especially the open box completes here the one full expansion very nicely, and then you can already think about closing your trade there. I think I took this trade actually here into 3rd hour. We can measure it for a moment. I remember I took that. I think from here I took the continuation into the 1x expansion, and you see that's by far enough for a trade. It's a nice R3 trade with 90 pips, and then I was already done for the session. And you see here, if you would like to hold on to that, you see here you get a switch candle indicated also by TrendPredator at the high of the day with these range expansions, and many took this as a reversal high of the day. TrendPredator doesn't switch around here because it's all bullish yet, so you can of course override that, but you also don't need to, as you will see, because then this switches back down. You see here reversal situation, and then it even collapses through the open box, and then you get a fake out high continuation high of day counter trend trade, because the lower time frames are all bearish but against the higher time frames. And let's see what it does from here. It collapses completely, so you would have a very nice trade. And you see here, if you wait for the TrendPredator signals, you get them here. Then once it rolls over the time frames, then you would have your short trade from here. The stop loss maybe behind the daily or inside the open box, as you like. And then in such a case, I would typically trade until the other side of the 8-hour range. That's 100 pips, and then you have another 100 pip R3 roundabout trade in the other direction. So again, you see here how TrendPredator helps you to read the rollover of the momentum and gives you all the levels you need for a nice entry in such type of trades. That's it with trading entry examples. Now I want to show you two templates. I'm using the indicators as well. One is higher time frame analysis, the weekly template. The other one is the 5-star ain't coming back template. I designed that specifically that you can just switch through them for any pair at the beginning of the day, and in 1 second you see immediately the situation. So I won't explain the weekly template in detail. You can watch one of my latest videos on that. But as you know, we typically are following this cycle, as I just explained before, and I designed a specific template that shows you exactly this weekly structure with everything you need. And I would say we go directly to the chart, and I'm showing you this there. So this is what it looks like on the chart. If you subscribe for TrendPredator, you get a very extensive manual also with it, and there you also find the configurations and the specific options you need to set up to get this like this. So there is everything you need, but I show it to you in a minute or now. So you have a daily chart here, and you see the colors are my TrendPredator fake out indicator, and you see immediately why this is interesting and helpful. You are on the daily time frame, so you only see day, week, and month table, but that's all you need there, and you see the context that is identified by TrendPredator Pro. Then you have a monthly and a weekly separator here, and I have the weekly high-low, monthly high-lows on, and the bias here, the breach levels of the week and month, and the high-low of month and week. And then you see here immediately how you can judge the different weeks very nicely. So you see here TrendPredator shows you the switch candles, and this is interesting. Switch candle means that you have a confirmed day 1 3-day cycle typically. So you have here, for example, 1 day 3 day 2 days 3 days of longs coming into Wednesday midweek, and then you get a fake out high here, and it closes below this breakout level, and then it immediately marks this as a red candle because this is a switch candle, and this means that this is a confirmed day 1 3-day cycle and a confirmed trend shift, and then it trends from here in the other direction. So this was a nice reversal week. Then here you see it coils into the next week, blow off to the bottom. Then you get a fake out low, day 1 3-day cycle here again. It gets confirmed here as it pulls away. So this is a reversal week in the other direction. Then you have a parabolic week going sideways with a fake out low, day 1 3-day cycle beginning of this week, trading into the new month, and so on. And then you get here, you see a fake out low into beginning of the week, parabolic week, with a blow off at the beginning of the next week to the bottom. But this was not a trend reversal because it immediately did a switch candle to the bullish side again, and then you have a parabolic week again into end week, another parabolic week here again, a reset, meaning switch candle to the low, switch candle to the upside. So a first red day trap, and then again entering the long trend, the bullish trend. So with this, you just open the chart and you can switch through the pairs, and you immediately see the bias on the daily time frame, and see the weekly templates and see the fake outs. Here, for example, we have a fake out low, that's a reset. Here's a fake out high, so this is a peak formation low, peak formation high, so we potentially get a parabolic situation tomorrow. So there is many things you can take from there, and it's a very nice way to do your analysis at the beginning of the day or the week, depending on your analysis plan. Next, higher time frame analysis. So that's our last thing we are looking at in depth. The 5-star setups. I also have a video on that. Ain't Coming Back template by Stacey, his new masterclass. I did my own interpretation of that. I also have a video on it, and I show you the template I'm looking at using TrendPredator Fake Out and Pro. What is this logic? Just for a minute. So we typically look at a breakout or down close. That's the major trigger, close in breakout. It should be second half of the week. So we start looking at that really on Thursday, Sometimes I also look at it on Wednesday already, but the better one is on Thursday, sometimes Friday. We want to be at the month extreme, so a high or low close of the month. We want to have 3 breakout closes or 3 breakdown closes. This strengthens the setups, not sequentially, but you will see that in a minute, in one direction. Then we want to have a monthly level freshly triggered. That's good, especially close to a new month time rotation. And sometimes after this breakout close, we get a first red or first green day at the extreme of the month. Then we also might get a very large move. So this is for hunting maybe the 1 or 2 larger trades of a pair in a month. And then once this one, this trigger and confirmation, that's what the template is for. And from there, you would then go down and look for the entry, relatively similar to what we just seen. You want to have a coil on the day, a parabolic pattern on the day. Then you look at the MA ribbon. That's the different EMAs, and want to have those crossed. And then you look at the TrendPredator multi-timeframe structure, of course. So you want to look at the 8-hour and 4-hour, the stop loss above one of those, and take profit then at a specific level, previous day low, for example, or range expansion, or maybe end of the day. I don't like that much because most of these trades, my testing showed me that, are coming back, though. So really hunting for the ones that are not coming back and letting the trades running back into your positions, for me it doesn't make sense. So I rather look for, let's say, three-star trades and take profits then after R6 or what at previous day low or something after an hour or so, and just take the money and call it a day before I then hold into the close and see my profits deteriorating again. So how does this look like on the chart? So it looks like this. It's pretty similar to the one we have just been looking at. So it's also on the daily time frame with the same settings for TrendPredator with the high, low, and close. But I would also look at the monthly closing price, for example. But then the TrendPredator fake out here is changed in configuration. It only shows you the breakout and breakdown closes. So the red ones are the breakdown closes, the green ones are the breakout closes. And I added another indicator that shows me the Wednesdays. So I don't have the weekly separators here, otherwise it would be too busy, but I want to see the Wednesdays to see where's the second half of the week. And then you see here, for example, 3 breakdown closes coming into the new month. Huge reversal trade here. I mean, it was a Monday, so that was hitting not this category. So it's always a question of balancing those things, of course. So you always have breakdown close, 3 breakout closes in one direction. You have the levels and so on. So in this direction, then you have 1 breakout close, 2nd breakout close, 3rd breakout close. It's a matter of how you want to count those. But even then, you have a breakout close here on a Wednesday close to the monthly level. And then you see here, you get a very nice incoming back trend trade. Then again, coming into the next week, you have here multiple breakout closes coming into a breakout close here on a Wednesday. So you could even look here for a nice trade, but you obviously didn't get it. But then you get a first red day here. So you have a first red day after 3 days, 3 breakout closes in one direction, high close of the month, first red day. And then you see here, this was the incoming back trade on Friday. That was last week, actually, giving a very, very nice trade. And then here we are going sideways, coiling into midweek. This was a large move, but not an incoming back template from this perspective here. So this is the template. I just every day come to the screen and click through the pairs, and you immediately see how where are you in the week? Are you having a breakout close or not? If you have a breakout close, you immediately see where is the monthly levels. Is there a first red day? and so on. And then you have a very nice quick analysis on your pair for the day. Options. So quickly going through the configurations that are possible with TrendPredator. Let's go through them one by one. So the first one here you see is an offset to UTC time. This might be important because especially the 8-hour and 4-hour candles are opening and closing differently for different data providers, brokers, and so on. So if you want to fix that to your specific likings, like I do, for like end of first hour New York session, for example, I want to close and open my 8-hour bar. Then I switch for the moment with the daylight savings. I need an offset of -3, for example. So don't really think about the absolute time. That's not important. Just look at the result on your chart and then add or subtract hours here that it gets to your specific liking. Then you have here in the sequential row all the different options based on the functionalities. So it starts with the high and lows, as we discussed before. So this is the 4-hour one that starts off, and you have always the option for color, is it dashed or solid, and the thickness. You can show the current candle if you like. I typically switch that off, otherwise it's too busy, and you can switch on or off the labels if you like. So it's this one here. Then you have here now the different time frames. So it starts with the 4-hour. That's, by the way, the one you have to change if you working with dark or bright background. So it's the standard setting is white for dark backgrounds. If you use white background, as I do here now for the video, you have to switch this to gray, otherwise you can't see it, of course. Then you have this here now for the different time frames, down here to the monthly, and then you come to the extensions. So you can start extensions from the 4-hour. I typically don't use 4-hour and 8-hour because it's also too busy. You can if you like. I use them from daily, and you can here also make configurations for the styling. You can specify if you want to see the closing price or not, if you want to have the labels, and here you can also specify the offset for the labels. So there you can switch how far they are to the right and if they're overlapping and so on. So I did a standard configuration for that. If you want to change that, you can just play around with this offset numbers here. Then after the extensions, we get to the breach lines. You can also switch them on and off. You can have custom colors even if you like. So you can make them the same color, for example, as you have for the other things. But I typically would leave that to bullish green, bearish red, of course. You can adjust the styling and again the label and the offset of the labels. That's all the breach lines. Coming down here, then you have the weekly and the monthly separator lines. You can switch on and off. This is a nice function. There's a flaw in trading view with that. So if you take a line, for many of the pairs it just doesn't show up. So what we did, we colored the first bar of the time frame, so it looks very nice on the lower time frames. It's useless on the higher ones. So if you're on the daily time frames, you have the whole Monday yellow. This doesn't make sense. So if for the higher time frames, I would switch that off, and I use also a different indicator for that sometimes. Then you have the tables, signals tables. You can switch them on and off, and especially the font color is important here. Off the table, so that's this black here and this black. So if you are on a bright background, you want to have this and this here in black. If you're on a dark background, you can keep them white. So standard is white, and you can change that here. Also all the other colors. So if you don't see the yellow, for example, you can change that, and you can also change the font size here, of course. Then this might be interesting. You can let TrendPredator generate alerts from setups. So you can here specify, send me alerts. You can specify your alert window, and then you can specify only for 3 stars, for example, only trend trades or only reversals, and only with specific Stacey Burke signals. So this can also be interesting. What you have to do is that you activate alerts for TrendPredator. This is done, I think, somewhere here. Exactly. So you have to open this one here and activate for TrendPredator, for a symbol or for a watch list, the overall possibility to even send you alerts. And if you create that, then the indicator itself is allowed to send you this alerts. So, and then the last option here is calculated bars. This is sometimes important because we really run with TrendPredator. It's a pretty heavy code. We run at the limits of what TradingView allows and is able to cope with. So we run at the border of memory limit and also runtime. And for some pairs, for example, for gold on Wanda or so, they have so much history in their data that it reaches this level. So you can then, if you like, especially for the higher time frame, this is important, reduce here the calculated bars. So for 4 hour and above charts, when you get an error message, you can just reduce this number here to 5,000 bars, then it works again. And the 2,000 you need for 15 and 5 minutes that it has all the data it needs to calculate the bias. So if you do that, I just reduce this to 5,000 for my higher time frame templates, then it all works nicely again. So this was it. Thanks for staying with me. I hope you like it. If you like this thinking around trading, you might want to enter my Discord community. We are discussing these things every day. You might want to like the video or join the channel, or especially if you like TrendPredator, you can just follow here the link TrendPredator.com. You come to my WOP where you can test this with a free trial. It's 30 days free. You can play around with it as long as you want, and then if you like it, you just stay in the subscription. This is true for the Essential and the Pro version. The TrendPredator Fakeout, you can just go to TradingView if you like, or also to the WOP. It's for free, and you can use that right away. Also on the WOP, if you join the welcome button, there that's the link here to the left. There is a free document on my trading style, and also of course the link to my YouTube library, also an online questionnaire to judge your self-assessment of your trading style. So there's a lot of resources that are also free. Feel free to join, discuss with me if you like. I'm very available and will answer your questions if you like. So in a minute, this was it. If you like TrendPredator and if you like what you see here, what I discussed, then join, try it. It really propelled my trading to a completely new level. I'm using the Pro version since January, and my results are really stunning for myself, and I'm happy to see others succeeding with that. Many are passing their challenges and so on, and really are able to turn the trading around with that. So thank you for watching and have a nice day.